Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is accounting for merchandise purchase. So we will be focusing on purchase here today. So first of all, measuring inventory. A list of assets usually containing the value of each individual items is called an inventory. And the goods a business has on hand for sale to customer is called merchandise inventory. And we have two methods of inventory: perpetual inventory method, an inventory determined by keeping a continuous record of increases, decreases, and the balance on hand of each item of merchandise is called the perpetual inventory. So you control it for each transaction. And periodic, a merchandise inventory evaluated only at the end of a fiscal period. So we don't track it for each transaction, only at the end of the fiscal year or fiscal period. When a periodic inventory is conducted by counting, weighting, or measuring items of merchandise on hand, it is called a physical inventory. How many units do we have? And what is the cost of goods sold? Is the amount a business pays for goods it purchased to sell is called cost of merchandise. And ordering merchandise, a form requesting the purchase of merchandise is called a requisition. A form requesting that a vendor sell merchandise to a business is called a purchase order. So what is this purchase order? We have here the name of the company, address, and so on, purchase from, ship to, and quantity, the code of these items, and description, unit price, and the total price. Okay? Cool. And using special journals. A journal used to record only one kind of transaction is called a special journal. Business typically use 5 journals. Purchase journal, the one that we will be working today. Cash payment, sales, cash receipt, and general journal for all other transactions. So purchase journal is the one that we will be working today. And what is it? A transaction in which the items purchased are to be paid for later is called a purchase on account. A purchase journal is a special journal used to record only purchase of merchandise on account. Because when I pay cash, okay, I pay cash. A journal amount column headed with an account title is called a special amount column. So what do we have here? Purchase journal, number of page, account credited. Why account credited? Because the purchase will always be a debit, because it is my inventory, it is an asset, so purchase will be a debit account, and we will be crediting the accounts payable for each of our suppliers. And a purchase invoice. An invoice used as a source document for recording a purchase on account transaction is called a purchase invoice. An agreement between a buyer and a seller about the payment for merchandise is called the terms of sale. And the date is called by which an invoice must be paid is called the due date. So here we have this invoice. So first, record the initials of employee processing the invoice and the invoice number. Second, a check mark by each of the amounts in the total column to show that the items have been received and the amount have been checked and are correct. Number 3, review the vendor's term and the payment due date. That is here. So N30, it means that we will pay in 30 days. And how does it work on Excel? Here, remember guys, our Excel files are free, and the link to download it is in our video description. And by the way, subscribe to our channel. So here, let's record only the first transaction. Okay, so April 6th, purchase merchandise on account from Win Lightning and purchase invoice number 525. So date, April 6. Better. Account title, purchase. So purchase is our debit. And document number, invoice 525. Debit 1,082. And the credit is accounts payable. The same credit here. So what do we have? This is our purchase journal where we add our purchases. So here, let's add this first one. So the date, April 6th, accounts credit. What is the name of our seller? Win Lightning. Win Lightning. By the way, we have another purchase on April 21st. And here, purchase name, purchase number. Let's consider here invoice 526, 525, 26, 27, 28, 29, 30, 31, 32. So let's consider these invoices here. And purchase, debit, accounts payable, credit. So here, 182 for our purchase. And okay, let's create some numbers here. Gale Electric, let's consider here 850. $. And Burden Chemicals, 2,654. Mobile Tools, 2,480. Win Lightning again, 3,612. Gale Electric, 4,695. SR Sports, Import, 1,525.50. Gale, 3,254. So only random numbers here. And now we have our total. So our total will be $20,000. And then we have here our purchases. So what do we have here? Our ledgers for purchase. So what do we have? So here, April 6th item, Win Lightning. And our debit, because we are debit here, we are debiting purchase, 1,082. And here our debit formula, previous balance plus debit less credit. And if we copy and paste all of these numbers here, we will have our balance must match with our purchase journal balance. And on the other hand, accounts payable, the same here. This one, the item Win Lightning. Now it is credit because our debit is purchase, our credit accounts payable, remember? And now let's copy and paste again. And here again it will, Win Lightning, debit here, and copy and paste here. Also 20,000. Does it mean they will match all the time? No, because accounts payable, when I pay it, I debit the payment. So it will decrease. And guys, we can also create ledgers for each of our suppliers. No problem. However, do you know we can do it on Excel without creating ledgers? See how amazing it is. How do we do that? Let's select all of our purchase on purchase journal. And then we go insert, come on, pivot table. By the way, we have a video only about pivot tables, and they are in our video description. Okay, so pivot table. This is what we want, what kind of data we want. And choose where we wanna add this. Not on new worksheet. Existing, we want it here. Where? Let's add them. Whoa. Let's add them here, for instance, or here. And then, okay. Now, what do we have? Let's move here. What do we need? We want these suppliers, but we want the ending balance of each supplier. So what do we want? So we want account credited. Verdant Chemicals, Gale, Mobe, SR, and Win. 5 different suppliers. Here we have 1, 2, 3, 4, 5, 6, 7, 8 transactions. And then what do we want here? The total. Where is the total number? Purchase, we want to sum it. So purchase on values. Purchase here on values. And then that's done. We have it. Oh, they are not in currency mode. Value field settings. Number format. Currency. Here we are. All of them here. And again, the same $20,000 here. And then we have our numbers. Oh. So a pivot table here, it shows us our purchase per supplier. The total per supplier here. It is on alphabetic order. We can also change it. So sort largest to smallest. Now Gale Electric, the largest one. Win Lightning, the second one. Verdant Chemicals, and SR Import, the smallest one. So we can do whatever we want with pivot tables. Pivot tables are so cool, and by the way, they are not easy. They are somewhat of advanced Excel, and we can move it. Now they are better. Cool, huh? I love that. Okay, guys. Thank you so much. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.